The stock market is crashing. Recession fears are everywhere. But guess what? I'm not losing sleep because my dividends are still rolling in. Today, I'm going to show you how dividend investing can not only protect your hard-earned money, but actually help you grow richer during a recession. By the end of this video, you'll know why dividend investing is the ultimate recession-proof strategy, and how to build a portfolio that practically pays you to weather the storm. So grab your coffee, smash that like button, and let's dive in. Look, recessions are brutal. The stock market goes haywire. Companies start laying off workers, and investors panic sell. But here's the thing about dividends. They don't care about recessions. When you invest in dividend-paying companies, you're buying a piece of their profits. And those companies, they still make money during a recession. Maybe not as much, but the good ones keep chugging along. Think about it. People still need toothpaste, soap, electricity, and internet access, even during a recession. That means while everyone else is selling their stocks for a loss, you're sitting pretty, collecting those sweet, sweet dividend checks. So, while others are stressing about their portfolios, dividend investors can sleep soundly at night, knowing that their investments are working hard for them. Now, before you go out and buy every dividend stock you can find, let's be smart about this. Not all dividend stocks are created equal. Some companies get jumpy when times get tough and start slashing their dividends to save cash. We want the rock stars, the companies that keep paying their dividends like clockwork, even during the worst recessions. These are the companies that have weathered storms before, have strong balance sheets, and prioritize their shareholders. So, how do you find these dividend champions? First, look for companies with a long history of consistently paying dividends. Next, check out their payout ratio. A lower payout ratio is generally better, as it means the company has more room to maintain its dividend, even if profits dip. Finally, consider the company's overall financial health. Look for companies with low debt, strong cash flow, and a solid track record of profitability. These are the companies that are best positioned to weather a recession and continue paying dividends. Now let's get to the good stuff. Here are some of the best dividend stocks to hold during a recession. Stocks that keep paying even when the economy is tanking. First up, we've got consumer staples. These are the companies that sell the essentials. Things like food, beverages, household goods, and personal care products. Think along the lines of Procter & Gamble, Coca-Cola, Walmart, Johnson & Johnson. Next, we've got utilities. These are the companies that provide essential services like electricity, gas, and water. Companies like Duke Energy, NextEra Energy, and Dominion Energy are good examples. Another sector to consider is healthcare. People still get sick, need medicine, and require medical care during recessions. Look for established pharmaceutical companies like Johnson & Johnson, Pfizer, and healthcare Reds like Welltower or Ventas. Finally, let's not forget about telecommunications. In today's world, internet and mobile phone service are practically essential utilities. Companies like Verizon and AT&T generate tons of cash flow and have a history of paying solid dividends. Remember, this is just a starting point. There are plenty of other great dividend stocks out there. The key is to do your research, understand the company's business, and make sure it aligns with your investment goals and risk tolerance. So, start with these sectors and build a diversified portfolio that can weather any storm. So, how do you actually build a dividend portfolio that survives a recession and keeps paying you? It's not about putting all your eggs in one basket. Diversification is key. You want to spread your investments across different sectors, industries, and even countries. Start by investing in those recession-resistant sectors we talked about: consumer staples, utilities, healthcare, and telecommunications. Next, look for companies with a strong track record of dividend growth. Dividend growth is a sign of a healthy and profitable company that's committed to rewarding its shareholders. Don't be afraid to invest in international dividend stocks. Many foreign companies have excellent dividend-paying track records and can provide diversification benefits to your portfolio. Remember, building a recession-proof dividend portfolio is a marathon, not a sprint. It takes time, patience, and discipline. Now, before you rush into dividend investing, let's talk about the biggest mistakes that can wreck your portfolio. Number 1, chasing yield. Don't just blindly chase after the stocks with the highest dividend yields. Sometimes, a sky-high yield is a red flag, indicating a company that's struggling and might cut its dividend. Number 2, ignoring valuation. Just because a stock pays a dividend doesn't mean it's a good investment at any price. Make sure you're buying stocks at a reasonable valuation, considering factors like price-to-earnings ratio, price-to-book ratio, and dividend growth potential. Number 3, not diversifying. Spread your investments across different sectors, industries, and even countries to reduce risk and build a truly resilient portfolio. Number 4, forgetting about taxes. Dividends are taxed, so factor that into your overall investment strategy. Consider tax-advantaged accounts, like IRAs or Roth IRAs, to shelter your dividend income from taxes. Finally, not having a plan. Determine your investment goals, risk tolerance, and time horizon. This will help you make informed decisions and stay the course even when the market gets bumpy. Dividend investing is one of the most powerful ways to generate passive income and protect your wealth during a recession. Now, I want to hear from you. Drop a comment below. What's your favorite dividend stock? Let's talk investing. And hey, while you're at it, hit that subscribe button and ring the notification bell so you don't miss out on any future videos about building wealth and crushing your financial goals. Be patient, stay informed, and keep building that dividend portfolio. See you in the next video.